Portillo's reported earnings this week and actually got back to same-store sales growth. This is something that they struggled with in 2024. The numbers aren't phenomenal, but the stock is starting to recover. They've gotten a little bit of news over the past few months, had some additions from Chipotle in particular on their board of directors, and they're going to be adding 12 new stores in 2025. So I want to go through exactly what we found out about not only 2024, but also their guidance for 2025, because that's ultimately going to be really important for investors. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's go right to the result. This is the high-level numbers for Portillo's. You can see that revenue was actually down a little bit in the quarter. That was because of a shorter quarter. They had a 13-week quarter instead of a 14-week quarter a year ago, but this is the big number, 0.4% same-store sales growth. And this is the 2-year comp stack at the bottom here, 4.8% growth. The reason that they use a 2-year comp stack is because there was a huge impact from the pandemic. You may remember when people started going back out to restaurants again. That caused a surge in same-store sales. And then there was kind of a pullback as that novelty kind of waned a little bit. So that's why they use 2 years as the comparison there. So you can see a few bad quarters at the start of 2024, but you're starting to get to positive numbers. Profitability, $13.8 million in operating income. That was just for the fourth quarter, $12.4 million in net income. And the one that I always look at is fourth quarter restaurant level adjusted EBITDA, $45.2 million. You always want this to be about $2 million in restaurant level EBITDA per restaurant. Now, the big story with Portillo's is that this is a growth company, and not just growth in same-store sales, but growth in the number of restaurants. They're trying to grow 12 to 15% long-term. Added 10 new restaurants, and these are the locations in 2024. They're going to be adding 12 new restaurants in 2025. Most of those are going to be in Texas. 75% is what they said in the Dallas area, and then they're going to be adding one in Atlanta. Expect that to be an area where they probably grow in the future, but not really going to be getting to scale in Atlanta yet. They typically open one restaurant, see how things go, and then open a few more in subsequent years. These are all going to be what they call Restaurant of the Future. That's what ROTF stands for. So they have Restaurant of the Future 1.0, launching a lot of those. A couple of those were in 2024. There's going to be more in 2025. And then they said they have a 2.0 coming later on, potentially later on this year. But this is the growth target, and this is the similar to their long-term growth target, but this is for 2025. What they expect, 12 new units. Same store restaurant sales flat to up 2%, so not a whole lot of growth that they're expecting. They're actually expecting to increase their prices a little bit and have some decline in traffic. Revenue growth overall, when you add in those new restaurants, about 11 to 12%. Commodity inflation and labor inflation are going to be headwinds. Shouldn't be any real surprise there. And restaurant level adjusted EBITDA margin, still pretty healthy at 22.5 to 23%. Adjusted EBITDA growth, not going to keep up with overall restaurant sales or revenue, but still a decent level of adjusted EBITDA growth once you can kind of price in some of these headwinds and actually move prices a little bit higher. Capital expenditures, and this is a lot from their expansions, $97 to $100 million. And here's that long-term algorithm, as they call it. Same-store sales, not expecting to be huge, low single digits, but here's that 12 to 15% annual growth that will get you to mid-teens revenue growth and low teens adjusted EBITDA growth. So obviously, 2025 guidance, especially on the bottom line, a little bit disappointing from that long-term future. One of the things I did want to highlight is on their balance sheet, you can see this kind of unusual thing here. That is their stockholders' equity. This will actually tell you what the number of shares outstanding is. Usually you can see this in the weighted common shares outstanding on the income statement. But what Portillo's has is a dual share structure where there's Class A shares and Class B shares. Class B shares are actually associated with the previous private equity owners. So those are still outstanding, but there are now, as of December 29th, 2024, just 10.7 million of those shares outstanding. There are almost 64 million Class A shares. That's what's typically traded on the public stock markets. But those B shares are down from 17.5 million a year ago. What you're going to basically see is this number, these two numbers combined. This would have been from the 2023 numbers. You add 55.5 million to 17.5 million. You get essentially the same as what you have here if you had 63.7 million plus the 10.7 million. There's going to be a little bit dilution from stock-based compensation and things like that, but they're essentially exchanging Class B shares for Class A shares as they issue them. But it does make it a little bit wonky to look at their financial statements and go, you know what, their shares outstanding is rising really rapidly. What in the world is going on? That is the explanation for that. So just wanted to highlight that because that's always something that's confusing for investors. Portillo's does have a significant amount of debt as well. Long-term debt, $275 million, and there is a little bit of short-term debt at $25 million. So that's not a huge problem when you're building out restaurants. Typically, it's pretty capital expensive to do that, whether you're financing themselves or whether you're just buying the equipment. That alone can be really expensive, and obviously, $100 million in capital expenditures is something that's probably going to need to be financed by the business. But just note that that's another piece of kind of the risk profile for Portillo's. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So I thought it was a decent but not phenomenal quarter for Portillo's. A little bit surprising that shares were rising almost 10% early in trading on Tuesday. I think shares fell back just a little bit. But I think at the end of the day, shares had just gotten so cheap, and there was some of that overhang from things like the wonky stock setup that was pushing shares lower, and that has been happening for a couple of years now. Kind of got into value territory, but at the end of the day, Portillo's is a solid growth company. I would like to see those same-store sales growth numbers growing, but when you look at their economics and the profitability they have from each one of their restaurants, if you're going to invest $5 to $6 million in building a new restaurant, and that's going to generate nearly $2 million worth of adjusted EBITDA or cash flow, that's something you want to do as quickly as you can. Management building 10 restaurants in 2024 and another 12 restaurants in 2025. Seems like they're starting to get into the flow of expanding the business much more quickly. If they can do that and get some leverage on things like operating spend, on their operations, when you only have 3 or 4 restaurants in a city, it's relatively expensive to deliver food to those restaurants on a daily basis. And they are going to have to do that given the volume that's going through these restaurants. So there's efficiencies to wring out of the business as they scale in some of these locations, particularly in Texas, but then they're going to open up in new spots. So Atlanta, they're moving into Denver. You're going to have some of the same learning curves in those kind of cities. So this is a company where you're going to want to watch that top line. You're going to want to watch same-store sales. If they can even get to mid-single digits, that will be really positive. But at the end of the day, the profitability that they're going to have and how they're going to pour that back into growing the business, as long as they have good unit economics on each one of these new locations, especially as they start to look at things like building in restaurants, maybe in places like downtown areas or strip malls, something they talked a little bit about on the conference call, that's where you could have more leverage in the business. But I'm definitely keeping my shares, not one that I've added in a little while, but I do like the future for Portillo's just because those economics are really solid. But let me know what you think about the quarter and the future for Portillo's. Leave those comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.